Welcome to the video newsletter for clients of Index Guru's Wealth Management. Hello, this is Farouk Jaffer, Certified Financial Planner Professional and Head of Index Guru's Wealth Management. Heading into this year, many investors were prepared for a vibrant economic cycle, but recent policy confusion, the war in Ukraine, and recession fears have roiled markets this year. As a result, I will discuss our domestic and global outlook, upcoming trends, and how we are positioning portfolios for success. Investors have been through a lot in the first half of this year. Given all the events that have occurred, from inflationary data, China lockdowns, and recession fears, this has resulted in an unprecedented blow to the markets and companies. As we will discuss, in an uncertain macroeconomic environment, quality companies should provide investors with more certainty than their lesser quality peers. Most recently, U.S. consumer inflation accelerated to 9.1% last month, a pace not seen in more than 4 decades, adding pressure on the Federal Reserve to act more aggressively to slow rapid price increases throughout the economy. The inflation data has created continued market volatility, resetting some of the optimistic projections from earlier this year. It will be the biggest issue driving our economy. As a result of the Fed's reaction to inflation, it is leading to record debt levels. This happens because small changes in interest rates have an outsized impact on governments, households, and companies. Russia's invasion of Ukraine presents economic risks that is felt globally. Given Europe's dependence on Russian oil and natural gas, its economy faces a very disruptive supply shock. Higher energy prices will lead to about a 30% larger hit to overall growth in Europe than in the United States. As a result, we are bearish on Europe and many international countries in the short term. As much as we'd appreciate a breather, volatility seems set to stay. The VIX index of equity market volatility suggests a move of around 1.5% higher or lower every day for the S&P 500 for the next month. Growth, driven by consumers and corporations, has held up admirably through the current headwinds. We believe long-term investors will be rewarded for enduring the volatility that will likely define markets over the remainder of the year. The next time market volatility feels scary enough to make you second-guess your long-term investment strategy, have a good think before you get out of the market. There could be a 70% chance you'll miss one of the best days. The chart below illustrates what has happened when an investor missed the 10 single best days in markets over the past 20 years. Megatrends are powerful, transformative forces that can change the trajectory of the global economy by shifting the priorities of societies, driving innovation, and redefining business models. They can have a meaningful impact on spending behavior, government policies, and corporate strategies. Identifying the potential for structural change and transformations early can be a key driver of successful investing. Technology breakthroughs like artificial intelligence, machine learning, and automation are unleashing a wave of disruptive threats across industries. Did you know that more than 75 billion internet-connected devices are expected by 2025? And that is up from 30 billion today. Climate change will cause us to have a greater dependency on clean energy like solar. Did you know that half of the world's energy is predicted to come from solar and wind by 2050? Certain commodities such as copper and lithium will likely see increased demand from the drive to net zero, and we are overweight the tech center and believe that it's well positioned for this green transition. Another major trend are longer lifespans and a larger demographic of retirees in their 60s. Did you know some estimates project a 45% increase worldwide in people aged 60 or older by 2030? With new technology comes the responsibility of privacy and cybersecurity. The Colonial Pipeline story is the perfect example. Did you know corporate spending on cybersecurity to counter online threats is rising quickly, up 12% from last year? We believe factors such as strong balance sheets, consumer and business spending, and ongoing trends will ultimately lead throughout this period of heightened volatility. Index Gurus favors U.S. stock holdings over European and other developed markets because we see the impact of the energy and food shocks as greatest there. What if we enter a recession? It is possible that this may occur, but keep in mind that the average recession lasts 13.3 months, while the average expansion lasts 60.3 months. Given our societal changes, it makes sense to tilt a diversified portfolio in various sectors. Why not just put it all in an IT or a QQQ? You'll notice that IT, the orange color, has held the top spots only in the past 4 years. Other top sectors include consumer discretionary in red and communication services light blue. This will change over time, so holding top companies in various sectors is important. It is so important to practice diversification, even though it sometimes feels painful and comes with FOMO, fear of missing out. Morningstar did a study comparing two portfolios over the past 20 years, comparing a growth portfolio to a diversified portfolio with 40% in income securities. As you can see, you would have actually come out ahead with a diversified portfolio. Focus on your goals and not the news. Index Gurus is going to make sure you are well positioned in great companies that will weather the coronavirus pandemic. With proper positioning and guidance, the chances that you will be in the green, in the positive after 1 year are 75% in your favor. The US has shown that they are willing to keep the economy humming, so it makes sense to stay invested. Thank you in advance for your trust. You can count on Index Gurus to help you reach your goals with financial peace of mind.